It's an interesting question, and I think at the end of the day, no, the aim is absolutely not for green financing to be killing the planet, but I think it needs to stay focused on the genuine outcomes and really where it's trying to go, and not be focused on the headlines, not be distracted, not get into politics or the other things. It just needs to be focused on actually getting to the best outcomes that we can. So one of the biggest challenges with data centers is obviously to achieve the hourly matching of 24/7 renewable energy supply. There are some grids where we're much closer to that because the grid itself has a lot of hydrogen, nuclear, a host of other things. But for a lot of grids globally, for a lot of data centers, it's a real challenge to achieve that. You can get a better matching when you pair solar and wind together. So when people have access to that, you can bridge some of the gap with batteries. But there are still a lot of challenges that need to be come across. What I find is interesting is that the technology is there. We've got the technology. Green hydrogen technology is in fact actually there. It's being piloted already in data centers. Storage technology, albeit up to 4 hour, 2 to 4 hour duration, is there. It's when we start to really look at the costs, the support for it, that we start to find more challenges in how we achieve it. The other big challenge for 24/7 is that you actually have to prove it's 24/7. It's one thing to put all of the infrastructure in place, get everything that you need, but you then also have to be able to prove that what you are providing to your customers is actually 24/7 renewable energy, and that's a really interesting tech challenge. Quinbrook is working on that, and I think that's a really big area where regulators are coming in. We've already seen the regulation in the EU with green hydrogen that is going to require that matching, and we expect similar things with the data center industry as well. So Quinbrook invests globally, well, across the UK, US and Australia, our key markets, buoyed particularly by the IRA that's come into the US and is highly supportive of renewable energy infrastructure. We invest exclusively really in energy transition and climate solutions, and that spans your core generation, so the bulk of it, the sort of solar, in particular wind and other things historically. It covers the storage element, which is absolutely key to achieving the energy transition, but then we also work on a lot of the gaps that many other people don't necessarily even know are needed in the market. So one of them is inertia and synchronicity in the grid, which is an interesting asset class, but it's needed to stop blackouts. And there are other areas of tech where through tech we can support storage. Once you have renewables and you have storage and you have synchronicity, you have other things in place, you still need to coordinate, dispatch, control all of that. And I think that's a incredibly interesting area of the market. So we work across all areas, very much as a specialist investor, trying to add value from projects from early stages through to scale platforms, kind of a billion plus in platforms, to create genuine additionality and genuine growth in the energy transition market. I've been 2 years now to the Tech Capital, to the conference, and I think what it brings together is a lot of people who are very specialist in the market, and I think that it's always been a really interesting mix. You have the developers, you have the lawyers, you have people in regulator, you have investors, you have debt providers, and it's a very specialized group of people who come together to genuinely discuss some of the challenges that they're up against, and being able to meet with people who may have some of those solutions as well.